Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Monday 28th of October. There's a relatively positive risk appetite that has developed through today's early part of the session, and that's come as further traction through these US-China discussions with a view towards sort of coming to an agreement to sign this phase one of the trade deal. Is continuing, sort of making agreements over the import and export of chicken and poultry, and it seems as though that both sides are sort of moving in the right direction. Certainly, I think the next real driver of a positive move on markets through this move towards a trade agreement would come as the sides sort of make way towards alleviating the tariffs that the US is supposedly to put on in December. To cancel those tariffs would be the next real positive step in the agreement. But for now, just drip feeding through positive news flow is helping risk appetite. And you can see that through markets where Euro's stronger, pound stronger, the yen is the underperformer, the Swiss franc is also an underperformer as well. We've got equity markets that are up today. Certainly the DAX 0.4% higher, as are the S&P 500 futures 0.3% higher. And just broadly speaking, you can see that helping to be more positive risk appetite through fixed volatility, which is lower, although a shade higher today, but generally speaking is lower. And also treasury yields, which are now sort of breaking higher. And certainly helping that. So it's a very much of a risk-on move at the moment, although it's only a marginal move at the moment, but still we're looking risk positive nonetheless. Now, in terms of data points today, we've only really got the US trade balance at 12:30. Don't forget the European clocks have gone back. The US clocks don't go back until next Sunday. So subsequently, the US data is now earlier throughout this week, and US trade balance is at 12:30 today, expected to be negative $73.5 billion there of deficit. So that takes me on to my chart of the day, which is Euro Swissy. And what we've seen is the improvement in the euro for the last few weeks. Actually, you can see this creeping high, and actually there was a breakout above this sort of 109.70 pivot line, holding that move, and then subsequently it's been testing the 110.20 mark, not really managing to break clear until today, where we saw we are seeing a decisive move higher, and then it's now testing that 110.55 to 110.65 area of resistance. 110.55 is this old low. 65 was this reaction high here. So you got this 10 pip worth of pivot band, but I think a move above that would be a confirmation of a breakout if it were to be seen, because that would really suggest that the euro is gaining traction, and you've got a base pattern here that you could argue implies around about 140 or so pips of recovery. 210 pips worth of recovery towards what would ultimately be sort of the 112 mark, which again would be at least a test of this next key resistance area, 111.60. So you can see that this is a recovery that is sort of gaining momentum. You can see the RSI in the mid-60s. That is the highest since April. The MACD line is also the highest, rising positively, and the highest since April, as are the stochastics. So it would suggest that intraday corrections are a chance to sell. You can see that through the hourly chart, where you've got this run of higher lows and higher highs. Look at that RSI on the hourly, consistently hitting that 40 mark and using that as a basis of support for the next move higher towards the 70 and above on the hourly RSI. MACD lines consistently above neutral. So it all suggests buying into weakness and pushing on for further recovery. And as I said on the daily chart, you can see this resistance around 110.55, 110.65, which is the next real test that you can see here, and I think that is what we're sort of edging towards now. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Also go to our website where you can sign up for our webinars.